Well, good morning, everyone. I want to thank you all for joining us today for our ongoing webinar series. This forum has become a great opportunity to go deep into the different facets of workplace culture. Culture is critical to all organizations, but particularly to those in the financial services industry. A positive work culture can strengthen trust in a company and reinforce its stability. But just as easily, a weak culture can damage a company's reputation and trigger volatility. Now, it takes a lot of work for an organization to create and sustain a strong culture, and that's why these discussions have become so important and valuable. They're a way for us to hear diverse perspectives and share best practices. So today we're taking on a significant and timely topic, the intersection of technology and culture in the financial services industry. Technology is changing so many aspects of our lives, and these changes are happening so quickly. Just think what occurred when the pandemic first hit. It took no time at all for us to move from conference calls to video meetings over Zoom, Teams, and WebEx. Video meetings allow us to see each other while we're working apart, which is wonderful. But interacting with colleagues over a computer screen all day, every day, has its challenges. It can start to feel impersonal, it can become more difficult to collaborate, and that lack of a personal connection can ultimately affect how people treat one another, not always in a good way. Time and again, technology has brought about positive outcomes as well as negative implications. For example, social media has enabled companies to better communicate and connect with the public, but employees can just as easily tweet and post about their work or their personal views while in company time and outside of it. And this can present a number of challenges. Likewise, technology has created tools that help companies predict customer outcomes and detect employee issues. But relying on technology too much can make leaders overconfident, causing them to overlook potential risks. Today, we're going to hear from a terrific panel of experts who are studying all of these issues. They've looked at how technology is facilitating communication, how it's affecting behavior, and whether it's influencing the likelihood of misconduct. They've also explored the interactions between two radically different workplace cultures, financial services and tech. And they've looked at the pressure that some leaders face in adopting technologies that they don't fully understand. To help guide our discussion, I'm going to turn it over to Susan Ox, an expert on corporate culture and business strategy and the CEO of Ox Advisory Group. Susan will introduce you to our panel and kick off the conversation. So with that, Susan.
Hi, thanks, John. And thank you for that great introduction to what I think will be a terrific panel for everyone here today. I'm going to give everybody a couple of housekeeping notes just as we get started. If you're not familiar with WebEx, if you go up to Layout, which is at the top of your screen, and you click on hide, what is it? It's not showing up on my thing. Hide participants without video. Your panel should adjust cleanly so you can see the rest of our panelists and not see some of the other folks who are on the panel but will not be speaking. One other housekeeping note for you, we will be doing, be plenty of time for questions at the end of the panel. So you can drop those into the Q&A box, which is on the right of your screen. You can put those in there anytime. We'll be collecting questions as we go through. And we'll be, as I said, getting to lots of questions at the end. So with that, let me introduce our terrific panel. First, and they're going to, I think, going to activate their video. Team, you're going to activate your video? Okay, yes, here we go. Here they come. All right, super. First, we've got Samir Srivastava, who's the Ewald T. Greather Chair in Business Administration and Public Policy at UC Berkeley's Haas School of Business. Brandy Avon is the Associate Professor of Organizational Theory, Strategy, and Entrepreneurship at Carnegie Mellon's Tepper School of Business. And Nate Fast is the George Pololimon Chair of Entrepreneurship and Associate Professor of Management and Organization at USC Marshall School of Business. Welcome to all three of you. So, as John said, technology has helped us and has created some challenges for us as well. Obviously, we are all here this morning by virtue of technology. We're all across the country. We know we've got participants from around the globe joining us this morning. But there are some challenges. So Nate, let's start off talking about some of what has challenged human interactions by virtue of technology.
Sure, great. And thanks for putting this together. Great to be here. So there are a number of challenges associated with using technology to communicate, which we're increasingly doing. And I want to give a caveat to say that that doesn't mean we shouldn't use it, but these are just challenges that we need to overcome. And I want to focus on three of them. One of them is in regard to culture in our institutions. There's fewer serendipitous interactions that we have, and that's part of what creates a really strong culture, is just bumping into people, having unplanned conversations. And the more that we rely on Zoom calls and chats, we have to be very specific about choosing only the conversations that we have a tendency to choose the conversations that are only needed, and that can lead to silos in organizations. A second challenge is less potent interactions. And so as an example, Vanessa Bones at Cornell has found that people tend to underestimate the willingness that strangers have to help or to be helpful. But that only applies to in-person interactions. And in fact, people are overconfident when it comes to the likelihood of people helping over email when making email requests to help, as an example. And so she found that face-to-face requests are actually 34 times more powerful or more successful than email requests. She didn't look at Zoom-based requests, but what that speaks to is that there's a little bit less potency to technological conversations. That may change over time as we become more accustomed to it. And then the third challenge is that tech-mediated communication actually can hinder fluency. And so I've done some research with Mindy Trong and Jennifer Kim showing that conversational flow is really critical to networking success and the relationships that we form. And there's a lot of research that comes out that shows that video conferencing and other forms of technology kind of hinder that flow, even if it's just slightly, hinders that fluency and reduces the kind of feeling of connection that we're generating with others. And other work shows that we actually have less creativity in groups when we're doing, brainstorming and conversations over Zoom rather than in person. So those are some of the challenges that we need to overcome.
Okay, does sound pretty tough. So Brandy, you think maybe there's some chance we're going to adapt to things?
That's right. Thanks, Susan. So technology, as we all understand, is always a tool, and we keep seeing these sort of jumps and sort of changes. So we went from email. Now a lot of us are on Slack, IM, and what we generally see is it's sort of a cyclical pattern in how we engage with technology. In so much as it's not that our relationships are fundamentally different, as Nate points out. They might be thinner because it's not as rich a medium. But what we see is early on, and I would say this as a cautionary tale, is many of us, when we start using a new technology, we don't think through all of the artifacts that it might produce, such as a paper trail, and we sort of treat it as it's going out into the ether. And we don't think about, how this is potentially codifying things we've said, which on the one side, as we get more into natural language processing and AI for unstructured data, this leaves a lot of data for us as scientists to go into organizations and understand culture and the network and sort of all sorts of things that I think we thought were a little ephemeral, in many decades prior. But at the same time, these tools just replicate the patterns that we usually already have in place, so our networks. So we chat, we Slack, we email with the same people we go to lunch with, we talk to the most regularly. And so what we see is this sort of early integration is people are much more cavalier and freewheeling with their use of those communications. But then over time, as it becomes integrated into how we do things, we start to get much more formal and start to, captured in that way. So it's a much more cyclical pattern.
I would say for the compliance folks who are on the line with us this morning, the cavalier freewheeling might not be so bad in terms of you doing your jobs well. But Samir, when we talk about kind of consistent human patterns, we've all been to high school. No matter where in the world you went to in high school, everybody knows that cliques form. And you've been looking a lot at subcultures and some of that and how that works. Tell us what you're seeing.
Yeah, so one of the challenges in the management of culture, particularly in large and complex organizations, is both understanding the range of subcultures that exist and then recognizing which of those subcultures might possibly pose a threat or a risk to business performance or to conduct of the firm as a whole, or conversely might be a source of innovation or positive ideas. And therein lies both the opportunity and the challenge, which is that organizations have always had different forms of gathering spaces, the proverbial water cooler, if you will. And in the digital world, we now have many, many, many more gathering spaces for employees than we've had before. Those gathering spaces could be, as Brandy was saying before, channels on Slack, private channels, or small groups that employees self-create. But there are so many other platforms, whether it's GitHub or even platforms outside of the organization where people are getting together and sharing ideas. And it becomes increasingly difficult for leaders to really understand the range of subcultures that are existing, which of those might be starting to veer off course relative to the consistency that leadership is striving for, but also, which of those might be sources of either new behaviors that we want to try to emulate, or innovation that we want to try to support.
Mm-hmm. So we're hearing maybe relationships getting a little bit thinner, but there are more opportunities for people to gather and in potentially more siloed ways. And it does become, as you said, harder for people to understand who's going rogue. Hopefully nobody,
Right.
but just in case. So Nate, you've talked about how technology can kind of reduce our sense of accountability also. Let's talk about that a little bit and some of the ways that you see that showing up.
Sure. I really see three ways that using technology can reduce our sense of felt responsibility or accountability for good conduct. Really focusing on kind of psychology here. So one of them is moral distancing, and we know that accountability is reduced when we feel less connected and more distanced from the people that we're interacting with or the events that are taking place. And so technology certainly has the potential to increase moral distancing. A second is reduced blame. So we might actually be able to point to, in the same way that we might point to kind of technological glitches or whatnot, the more we rely on things like digital assistants to coordinate conversations or coordinate relationships. For example, we can point to those or to algorithms, decision-making algorithms. If we're relying on those, it's easier to point the blame to those, maybe rightly, maybe wrongly, as opposed to taking personal accountability for what those algorithms are actually doing. The third is very psychological. I'll talk about it a little bit later, but the fear of negative evaluation is a really powerful kind of tool that humans have for making sure that we feel accountable to each other. So it can have negative consequences, but can also have positive consequences. And in this case, it might be more positive, where we feel concerned about being judged negatively by others. That helps increase our desire to behave in ways that are, morally accountable to others. And the more that we use technology, in my research, it shows that we have a reduced sense of fear of negative evaluation. And so we're more confident to kind of just take action without worrying about judgment. And so those are three challenges that really could hinder accountability.
Mm-hmm. And so Brandy, we've talked a little bit about personal responsibility in this, and Nate was just talking about that. And you were mentioning that sometimes people can start to cede personal responsibility if they think, well, the machine is responsible. And even though we're creating all these paper trails, are we potentially crowding out some of the responsibility that organizations need people to feel?
So I would say yes and no, again, to this idea that a lot of technology is cyclical, and, as it's early and we haven't integrated it, it can often create all of these black boxes, uncertainties, complexities. And as we negotiate that, it's much easier as, to sort of offload it onto a faulty tool, but it's still a tool. And I think we all kind of know that. But it does, in one way, really allow us to expedite. It is Miracle-Gro on a lot of issues in some ways. And so what I mean by that is, in a really robust, healthy culture, technology can help sort of propagate it throughout your workforce and really reinforce it, and can have these really wonderful alignments. On the flip side, technology can help facilitate, as we've discussed, I look at sort of collusion and fraud, And it becomes, especially in the early days, if it's a technology that the rest of the environment hasn't picked up on, it might give you sort of an advance because you can hide it. It's harder to detect until it's fully kind of something we capture and know how to analyze as an organization or a firm.
Mhm. Is there a possibility we get to too much data? Brandy, just sitting on that point, are we getting to the point where we're, right now in the financial services industry, we collect so much information already, right? Everything is tracked, every email, every message is monitored. Are we at the point where there's too much data for anyone to really responsibly sort through?
So that tickles me, and I can see Samir and Nate also smiling. That only delights our academic hearts that you're collecting too much data because there's no such thing in our world. And what I think the flip side, if I were to put a happy spin on it, yes, organizations are amassing wild amounts of unstructured data. I will even argue that they're collecting data they don't even know how valuable it is to really analyze and mine in support of their workforce. But I think we're at this really interesting turning point as we start to really engage with AI and machine learning to bring a lot of, some of the best practices from Nate, from Samir into the workplace to really help support that work. But we need that data to sort of instrument our models and to sort of understand what's going on in those organizations. So I would say no, Susan.
No such thing. Academics, never too much data. So Samir, you're nodding, and I know that you looked a lot at kind of some of the data and uses of the data. What are some of the potentially useful applications you see of using data?
Yeah, so just again, building off of what Brandy just said, there's just been a proliferation of digital trace data, both within and outside of organizations. So let's
You
start
just
with...
tell people what you mean by digital trace data.
Yeah, so I was thinking the simplest starting point for that might be email data, right? And so we've had email, obviously, data in organizations for now a very long time. And it's only very recently that we've actually learned how to use these data to help us extract cultural signals about an organization or about individuals or teams within that organization. But that's just one example. We've already talked a little bit about platforms like Slack, and instant messaging. There's a whole range of ways in which employees are communicating with each other. And we have now records of all that communication. And we now have the tools of machine learning, computational linguistics, which are increasingly being deployed to help us pull out cultural signal. But if we go outside of the organization, there are even more data sources. So think about platforms like Glassdoor, where employees gather to rate their organizations and to share their experiences in that organization. There are now a whole host of papers, including some from my lab, where those data are being mined to extract signals about the organization as a whole. Or think about conference calls that leadership teams have with the analysts who cover their stocks. Those calls are now transcribed, and again, we have papers looking at those calls and what they can reveal about the signals of culture that leak during these calls that the management team has. And then we could also think about inter-organizational dynamics. So again, thinking about post-merger integration and the communication patterns of firms before and after they come together. These can tell us things about things like cultural compatibility before firms actually merge, but also the efficacy of post-merger integration. How quickly are people assimilating? And using some of these same methods, we can start to assess things like the rate at which individuals, teams, and the organizations as a whole are integrating culturally following a merger. We have papers looking at that. And then last thing I'll point out is the topic of diversity, equity, inclusion, and belonging, something that nearly every organization I've come across recently is investing a huge amount of time and energy on. And if we think about what a lot of the work on DEIB focuses on, implicit in that work is the idea that we're trying to create cognitively diverse workforces. We're trying to get people together who think about the world differently. And the ways that we've measured cognitive diversity in the past have been using things like surveys of personality or other ways of processing information or demographic data as a proxy for cognitive diversity. we now have the tools to actually measure in real time how diverse a given team is in the ways in which it's communicating with one another, how that varies by week, by day, by hour. And that just opens up a whole new range of opportunities for measuring cultural diversity, cognition, and its implications for performance.
That's fascinating. And of course, we all know there's been challenges with bias in AI. So in something as important as measuring cognitive diversity, we need to make sure that those systems are designed really well, right? So that
Absolutely, absolutely. There are with any of these tools, none of them is a panacea, and they all have trade-offs. So recognizing their limitations is really important. You mentioned bias is absolutely one of those. In some cases, these tools help to address human biases. In other cases, they exacerbate existing ones, right? And I think one of the important areas of research right now is trying to disentangle those two phenomena.
Mm. And I'm going to ask you to say one more word about the post-merger integration. I found this so fascinating when we talked before. What exactly are you looking for when you're looking for cultural fit among two organizations?
Yeah, well, so one can use such a tool to look at the likelihood that two firms are going to be able to successfully integrate, right? How divergent are their patterns of communication before they come together? But in this particular paper, what we used it for was to measure something that in the literature is referred to as symbolic boundary maintenance. The simple idea being that groups, whether we like it or not, try to maintain boundaries relative to other groups. And
Sometimes certain banks will merge and the people from the, old will still say, they answer the phone with the name of the old bank. I won't even call out who I'm talking about, but some of you on the call know who I mean. Go ahead, Samir. I'm sorry. Keep going.
yes, no, that's a much more elegant way of saying what I was trying to say around symbolic boundary maintenance. So the idea is there are at least two different ways in which people can maintain these kinds of symbolic boundaries. One is to reify the ways in which they used to communicate pre-merger. And the other is contemporaneously, in real time, to maintain differences relative to people in the other group. And using machine learning methods, we can train models that will learn how did people communicate prior to merger, because we have data pre-merger. And then we can see the extent to which when they're communicating with somebody from the other side, they communicate in ways that bring back some of the patterns of communication from the past. And then we can also measure when someone's communicating with someone from the other side versus someone from their own legacy bank in the new organization, to what extent are they differentiating? And what we find in our analyses in a particular setting where we had one bank that merged with two other banks is that 18 months after the merger, we could still detect in language which bank somebody came from and the boundaries that existed between banks even after they got together. And then we could look at that to see that's the typical pattern, but if you look across branches, some branches integrated much more quickly, some less so. We could work with the CEO of this particular firm to help guide him on, which of those branches are the ones where leadership needs to spend the most time to help support integration, which ones seem to be in good shape, and so on. So I think it's a really valuable management tool that way, but it's a kind of thing which you couldn't get at very easily using just survey-based methods, which is how this has been studied in the past.
And how hard is it, Brandy, for an organization that is not, expert in consuming mass amounts of data? How hard is it for them to actually implement some of these tools with their friendly local academic, of course, but
it's getting easier, and that's where I do think the growth and adoption of AI and machine learning can be very advantageous, because turns out they can often carry the load of many RAs in terms of cleaning, prepping, finding controls for a lot of the models that we would use. And I think the dialogue, because to your earlier point, we've amassed so much data and organizations are sitting on it. We all know that in terms of our workforce, there's still inordinate amounts of inefficiencies. And what I mean by that is your culture isn't strong enough, so you don't have shared mental models. Your ability to communicate and broadcast messages is undermined because you have these cliques or silos, which might then also impede organizational learning. So what I will say is I'm hopeful because I think what we're seeing is the convergence of academic insights starting to be married to the technology that it can bring it directly into organizations. But I still think we're very much at the front end of that sort of HR technology.
Mm-hmm, mm-hmm. So Nate, we've talked about how we are tracking people in sort of a million different ways at this point. And it turns out that people have some kind of interesting responses to being tracked. Let's talk a little bit about that and what your research has found.
Sure. Yeah. I mean, in this new era, it becomes critical for not only scholars, but also, managers and executives and decision makers to master lots of different disciplines and different angles. And one of those angles is psychology. And so that's why I co-founded the Psychology of Technology Institute with Juliana Schroeder, which is, a network of researchers, behavioral scientists who are studying both the ways that technology is affecting people, but also how human psychology affects whether people adopt technologies and how they use them and so on. And so there's this really interesting juxtaposition or kind of almost opposite effects, but it makes sense when you think about it, that has come out of my research lab. And so when it comes to surveillance, employees have always been resistant to surveillance. We don't like being, having somebody look over our shoulder at our work. We like to have autonomy in how we do things. And as I mentioned earlier, when we have somebody observing us, we do feel that kind of fear of negative judgment or negative evaluation, and that kind of like hinders our flow or whatnot. So people don't like being closely monitored and surveilled. And what we found is that when we do the surveillance through technology, people are more open to that. I'm not necessarily saying whether this is good or bad or whatnot, but psychologically, it's less aversive when we're being tracked by a watch or our email or, something that we're not really like aware of, and there's no human behind that reminding us that we might be judged. And so it kind of operates in the background. So people are more willing to be surveilled when it's through technology. On the flip side, though, as Brandy and Samir are talking about, there's this rich data that we're collecting. When it comes time to make decisions and about HR, for example, I have other research that has shown that people actually view HR decision-making algorithms as less fair than humans. And this is kind of interesting and ironic. As Samir mentioned, that there can still be bias in algorithms. There absolutely can be. But what algorithms give us the opportunity to do is eliminate or overcome some of the human biases that we know exist. And that's one of the big complaints that employees have is, humans are biased in their decision making. Algorithms can overcome that, but for some reason people feel very averse. They feel like it's unfair when algorithms are making decisions about people. And so it's really a math, not people situation. So people love algorithms for math related things because they think that algorithms are very good at making, calculations in that sense. And then when it comes to making decisions about us as humans and people, maybe more qualitative judgments, people feel like algorithms cannot do that very well. I don't think they're correct about that, and algorithms are getting better and better, but that is the perception. And so understanding, employee psychology or client psychology is really critical in this area.
So you're saying, just on that last point, you're not sure necessarily that the AI is making worse HR decisions. It's just a perception by people that they might be worse decisions.
Yeah, or that AI is unable to make qualitative contextualized decisions. And certainly, early on, maybe algorithms or computer-based algorithms or neural networks are going to be a little bit less nuanced than human decision makers. But as they get more advanced, they can far surpass human ability to do that. And I think that they can take into account some of these nuances that people don't think they can.
Mm-hmm. And so on the first point that you were making about people seem less concerned about being tracked by machines and by people, is there a downside to that? Because, with a compliance mindset, that feels like, oh, good. So they're not going to be guarded, and we'll kind of know what everybody's doing.
Yeah, I mean, absolutely downsides to that, positives, but also negatives. certainly loss of privacy is a big deal, and an ethical, kind of conversation that needs to happen. I argue with Arthur Jago that people are less and less capable of protecting their, or fighting for their privacy because we just feel overwhelmed. People feel overwhelmed. It's going to happen anyway. We justify it because we like some of the outcomes of the algorithms that we're using, whether that's like, making more money for us or helping us connect with people. And so I don't think people are going to be fighting for their privacy. So that's kind of like a policy area that the policymakers really need to take into consideration. But yeah, there are negatives associated with the pervasiveness of these tracking technologies that we have to work out.
And Samir, from a cultural standpoint, when we think about sort of people not fighting for their privacy, and I certainly relate to that overwhelm of like, oh God, they're just gonna, it's a hopeless case, right? As leaders, as corporate leaders, how do people need to be thinking about setting a culture that makes people comfortable and is protecting them on some level around these privacy issues?
Yeah, I mean, I think that's a really important imperative going forward. And I want to just build on something that Nate talked about, which is the AI tools and technology are getting better and better. And I completely agree with that. And perhaps people's beliefs in the quality of the decisions coming out of these algorithms may not yet be where the algorithms themselves are if we think about the state of the art. That said, if we look at the world that managers are living in and the providers that are out there selling various forms of AI-driven judgments about humans and so on, it is very much the Wild West, right? And we have all kinds of firms out there, providers out there that are purporting to be able to predict various kinds of things, like who's going to quit the firm, and not just who's going to quit in the next year, but like giving supervisors reports with predicted probabilities of each of their subordinates resigning this week, for example, which, if you ask me, is just plain irresponsible, right? Not only do I not trust the particular prediction coming out of that algorithm, or if I do believe that there's some predictive validity, I'd like to know, what the error bands around that prediction. But more importantly, those tools, when we put them into the hands of the manager, can start to become self-fulfilling prophecies, right? So leaders can start to behave in ways that can induce exits, for example, of their employees. And once it becomes known, and it will become known, that leadership is using tools in this kind of way, it will have unintended negative consequences for the culture and erode trust in the organization. And that is very difficult to recover in any reasonable time frame. So to me, what this really implies is that at the very top of the house, at the very senior leadership levels, there needs to be not only policies around this, but also governance bodies that are overseeing, what are the ways in which we're using our internal data, what kind of predictions are being made, how is this being put into practice, what are we revealing to our employees about what's being tracked and how, what kinds of opt-out provisions are we providing them, and how do we take advantage of all of the new analytics that become available to us, but do so in ways that don't fundamentally erode the core values of us that we have as an organization.
That was a great list that you just, for everybody out there, all our corporate leaders on on the call, talk, how do we use the data? How do we put it into practice? What's it revealing? What are the opt-out provisions? And how do we take advantage consistent with our values? I think that's a phenomenal place to start. Have any of you seen corporate boards having kind of technology governance committees of the board getting set up? Is that something that's happening yet? I see Samir's nodding, Brandy's nodding.
I think a lot of boards have such committees. What I think there's a lot more heterogeneity on is the degree to which their charters encompass this full set of issues, right? And I think that's where you might see the existence of a body, but if you dig in and look at like what are people actually spending time talking about, there is, from what I've seen at least, a lot more heterogeneity.
Mm-hmm, mm-hmm. So one of the other things I know a lot of people in the tech kind of world are talking about right now, or financial services people in the tech world, is digitization and decentralized finance. Brandy, you talked about DeFi. You called it fascinating and frightening. Let's talk a little bit about what some of the areas you're focused on within that space.
So yes, I think, we've talked about other things being the Wild West. I feel like this truly is. We're seeing such increases in complexity and high uncertainty, which, from an economic, sociological, political standpoint, are just incredibly challenging times to navigate. From a governance perspective, we just don't know how to regulate and how to track and what to, what to codify, how to look for red flags. None of that has been fully developed, as well as there are a lot of pioneers and people doing really innovative things in the spaces. And I think the decentralization allows for that kind of emergent, technology, new insights to come along. But similar, to the HR tech, Samir, I think kind of pointed to, you can see a lot of charlatans, right? And so a lot of snake oil salesmen. We know that, with the gold rushes, right? That we saw a lot of, those individuals made a lot of money. And so in that case, we want to make sure that we don't segregate the data and segregate information so that some people have greater access to it to either manipulate or create what we would call like structural secrecy around it. And we can see that within firms and across markets as well, where you see sort of this black box becomes sort of really calcified and very few people know how to use it or how to measure it or how to engage with it, but it becomes its own entity. And with, decentralization and this complexity, it's really kind of ripe for that in these issues.
Mm-hmm, mm-hmm. I love that term, structural secrecy. You had also mentioned that it raises some decentralization raises some challenge around whistleblowers. Can you talk about that too?
Right. I have some work on who sort of blows whistles and under what conditions. And, just at a very simple level, we can understand that to be able to blow the whistle, you need to know what's going on. And so if everything's decentralized, and one of the things I found in my work, when there is a collective of people engaging in fraud, like at Enron or terrorist cell networks, that they sort of need the information. Everything's kept separate, right? That structural secrecy. So I only let Nate know a little bit. I only let Samir know a little bit. So the decentralization allows for that. And so it can make it very challenging for a whistleblower or somebody who really has, the ethical fortitude to go ahead and call out this behavior to come up with a complete picture, right? Because we have this factioning, and that can undermine their just ability, and as well as for regulators just to detect it if it's sort of dispersed across different individuals.
Mm-hmm, mm-hmm. So you talked about, and I love as I said, I love that structural secrecy and the black box and the growing nature of the black box. Nate, a lot of people, you talk to people in the industry right now, and a lot of people are either trying to prove that they understand this new stuff or are trying to fake it well because they feel a lot of pressure because obviously this part of the sector is growing astronomically. Even with the recent downturn, it's still become a huge asset class, a huge portion of kind of what's going on in the world. What are some of the implications of that pressure for kind of the old guard and the new guard that you're seeing?
Yeah, that's interesting. So a lot of my early research has been on the psychology of power and how power shapes, or how our position in the hierarchy shapes decision making. And anytime there's, new changes like the ones that we're seeing today, there are new power dynamics and new power players and so on. And so one of the core findings that came out of a lot of the early research on the psychology of power, and that came out of my lab as well, is that power tends to elevate our sense of control. And so we all kind of have this illusion of control. We think we can control more than we really can. That's good because it helps us get up in the morning and helps us go through our day and kind of actually try stuff, right? But it turns out that power exacerbates that illusion of control to a higher level and leads to overconfidence in the quality of our own information and our judgment and our decisions. And so as new players gain power in these, through these new technologies and expertise in these new technologies, That's one thing that they should be concerned about is becoming overconfident in a way that hinders their own decisions, but also hinders the industry as a whole. On the flip side, what we found is that when people are in power, they view that as a role, and when we have power, we feel this strong obligation or a sense that we're supposed to be superior, like we're supposed to deserve the power that we have, and that creates psychological pressure to demonstrate superiority and competence. And so, to your point, Susan, as there are these new technologies to master, that creates the potential for threat. And what I've found is when people are in a position of power and they feel threatened, their competence is threatened, they tend to respond with aggression, with dominance, with trying to hold on to their power in ways other than competence. And so as an example, we had a study done with a multinational oil company that when we looked at the managers throughout that company, it was the managers who had high self-efficacy, who had high sense of competence in their roles that were more open to employee voice. They solicited more voice from others. It was the ones who felt incompetent that kind of stifled employee voice. And so you might see some of that both inside our organizations in the industry here, but also, the structural secrecy that Brandy was talking about might also become more in play. So it's like we're trying to hold on to our power in ways that, maybe are not above board.
Mm-hmm, mm-hmm. And so what are some of the hallmarks of a culture where people are kind of operating in this sphere are sort of not having a lot of employee voice, kind of shutting down communication? What are some other, Brandy, you're nodding along.
Atomistic, right? Sort of where you're sort of competition can be wonderful in an organizational setting, but when you hit people who really interests should be aligned in terms of certain goals, that they constantly feel like they have to act and their self-interest atomistically, I think can really exacerbate that lack of voice and, marginalization a lot of the time.
Mm-hmm. So interestingly, in my own research that I've done over the years, fear and overconfidence, those two things, Nate, that you were just talking about, are very consistent themes that I've seen show up specifically in research I've done on kind of mindsets in the industry. And one of the antidotes to both of those can be kind of building a culture of continuous learning, right? If you're learning, then it's a little less scary to maybe not know the answer. And if you're learning, maybe you are not quite so overconfident because you're constantly finding new information and kind of staying a little bit more humble. Now, that kind of idea of continuous learning can also be very much a hallmark of tech culture in the tech world. Samir, you think that there are some aspects of the kind of tech world culture that could be really useful for financial services. Let's talk about some of those.
Yeah, so if we think about the typical tech firm, we should be careful not to overgeneralize because there's also heterogeneity within the tech world. But one hallmark that we would find in a lot of tech firms is the culture of A/B testing, right? And this comes really out of the design and development of websites to begin with, but has been applied to all kinds of product offering choices and service offerings and the ways in which we frame and present products to customers and so on. And that's just part of the DNA of many tech firms. We're going to A/B test almost everything, whether it's a headline in the New York Times or the suite of offers that we're providing to a customer. And so I think as the finance world and financial services engages more with the world of technology, that to me seems like a positive potential spillover, is bringing more of that mindset of rigorous testing of ideas into the world of financial services. But I think the opportunity and really the untapped opportunity is taking that idea of A/B testing and going beyond just the design of platforms and websites, but really thinking about people and risk management practices, right? So to what extent can we run A/B tests at scale about ways in which the culture of the organization as a whole can be nudged in one direction versus the other. So if we're trying to think, going back to the previous conversation about employee voice, what are some interventions that will encourage voice, for example, in retail branches, or when people start to notice things that are going awry, and can we run a randomized control trial where we experimentally manipulate which parts of the organization get one kind of intervention versus the other, and in a rigorous way really see what works and what doesn't. That I think is a really important next step for financial services.
Have you seen anyone? So, part of the challenge financial services has, right, is that can't move fast and break things, right? We don't want to break anything. So have you seen kind of a spirit of experimentation work in a kind of heavily regulated, controlled environment?
Yeah, I think it can. There are certainly in the regulated utilities world, there are some firms, energy firms, for example, that have been doing this kind of thing, maybe in a more focused way. For example, how do we present data to consumers about their usage patterns, and the same information, like here's your usage, when presented in one way versus the other, can nudge people to start to change their behaviors and habits. So that's a highly regulated environment where it's possible to do. I think the way to think about it, one way I think about it is through the lens of what I call little r and big R research. So little r research is the stuff you're doing all the time, every day, to improve the operations, to fine-tune your offerings and so on, and to manage risks. And then big R research are the bets you're making in really like big long-term learning. So not every study is going to rise up to the level of, quote, big R research, but say there are a couple of outcomes you really care about and a couple of ideas that you think really could move the needle and might actually help differentiate you relative to everybody else. Those are the larger scale experiments that are worthy of a randomized control trial. But if you rely just on big RCTs to learn, then you're going to miss out on all of the day-to-day continuous improvements you could be making. So I think a leadership team really needs to think about both here's our little R research agenda for the quarter, and then for the year, here's our big R agenda.
I love that. I love that. And the little R is a very much, so much of the work I wind up doing with leaders is around how do you build a culture of continuous learning? And the little R is very much that, kind of getting in the spirit of capturing that kind of on a daily basis. I love thinking about those two pieces. Okay, we're going to kind of move into sort of closing remarks, and we're going to start to take Q&A from the audience. I want to just remind people there should be a Q&A box on the right side of your screen, and to drop your questions into that part, because that's how we're going to do the questions. So panel, guys, I want to have you all each think about one thing you think, kind of a prediction for how you think technology and culture are going to be interacting over the next couple of years. Samir, I want to come back to you because we talked about, is sort of the digital data information going to supplant the old culture tools? Like, are we done with employee surveys? So give us your thoughts on that.
Yeah, so I think the temptation, especially for those of us who are working a lot with the digital tools and these new ways of measuring culture, is to assume that the old ways of understanding culture, and if we want to go really back in time, we can go to one of, I think, the most powerful tools for understanding culture, which is simply walking around and observing people, right? Participant observation, ethnography is really where cultural analysis got started. And then it progressed, of course, to things like surveys. And many of you, almost everybody on this call, I'm guessing, has completed some form of a culture survey, perhaps quite recently. In my mind, those tools are not going to go away. But the advent of digital tools will unlock the potential of those traditional tools. So we get one level of insight by understanding behaviorally how people are communicating and how people are linguistically accommodating others or not, for example. But we get a completely different level of insight if we can actually probe people's minds and understand the meanings they attach to different relationships and how they're communicating with each other. And there's now some new work, again, including some work from my lab, which starts to bring together survey data, for example, with digital trace data. And what it allows us to do is, one, just get complementary perspectives into what's happening in the organization. Here's what people say, which is revealing, but here's what people do. And the gaps and inconsistencies between those can be especially revealing. But the other thing that the bringing together these tools allow us to do is to develop models that allow us to, over time, even predict how people will respond or feel about a set of issues based on the ways in which they're communicating. So what are the linguistic markers of different cultural traits that people self-report in surveys? And as we develop more reliable ways of imputing those responses, what it will allow us to do is actually not have to do quarterly surveys or annual surveys, not have to worry quite as much about response bias with response rates dropping off, because we'll be able to fill in the gaps through these imputations. Now, how we do that in a way that still protects privacy and confidentiality and doesn't set off the creepometer, the creepiness gauge, if you will, in organizations is a challenge. But I think that's my forecast of where this stuff's going to come together.
And you, just to follow up on it, so you wouldn't have the concern when you talked about being able to kind of better predict, the example you used before about predicting attrition rates. You think there's a way to still balance that?
Yeah. So the key difference between the two is the level at which you're making the prediction, right? So if you're doing it at the individual level and using it to guide decisions you might make about whom to promote and whom to support in different ways, that's where I think you're really in the danger zone if you aren't very careful. If we're thinking instead about aggregate patterns, how are we, what's the degree of cultural alignment across the globe? And are there places where, again, we're starting to see people veering a little bit off course, where therefore should management focus its attention and time? To me, it's not without risk, but it's a much lower risk way to use such data.
Okay, that's a great point. So, sorry, my cat really wants to join the panel. So thinking about when we, Nate was talking about the algorithms for HR decisions making people uncomfortable. So at the individual level, maybe it's the creeptometer is a little high, but the aggregate level, when you're thinking about your best practices for data, that's a great point. Thank you, Samir, for that. Okay, Brandy, do you have a prediction?
Yes, I think we're sort of at the beginning of this helm of really organizations and financial services turning a lot of their analytical power inward, because I think that's sort of the last sort of bastion of where we can really drive progress and innovation. I think what's, there's, I'm going to be a Pollyanna on this call. I know this now at this point, but, we're talking about all this tracking of data, and I 100% understand how that will often feel like an invasion of privacy. But as long as it's designed around the task and performance and is sort of clearly linked, there's actually a lot of positive implications. We know that we are biased. We like to work with people who are similar to us, who we prefer socially. And so what we've known is since humans have interacted in some kind of social collective capacity, that's created nepotism, sort of these collectives. But when we introduce measures that are objective, right, it sort of takes that away. And so we can start to see, and what we do find is that underrepresented groups actually get a much fairer shake. So we know, one of the sort of canonical studies in this domain was, it used to be with complex, uncertain tasks like, in academia or in science and, patents or innovation or tech, managers don't know how to evaluate your performance day to day. And so what they would do is first in, last out, right? As a proxy for how, because we didn't have data on how your performance was going, how that RFP was being developed, any of those markers. And what that meant was we were penalizing parents who had to be home, or even really efficient workers who were able to get all of their work done. And that's not what we should be looking at, right? And so as we get much more sophisticated, fine-grained tools, hopefully we can really measure performance and create a much more equitable, representative workforce. I did want to tie it in a little bit to what Samir was saying, though, is like as a cautionary tale in that space. He and a lot of us are really interested in field experiments and random controlled trials because of causation, because, again, there's a lot of products and bad predictions out there. And humans are complex. We are not as easy to predict as widgets or pallets or dollars. And so you really want to know in earnest if your $100 million new back-end system really is going to advance performance, right? And doing those testing can give you that and give you a real clean lens into what is driving the outcome that you care about. And that's where I think we're sort of seeing the beginning of, and I'm excited for.
Okay, we need the Pollyanna voice here too. We don't want to certainly don't want to create the impression that technology is bad, because I think there's so much to be gained. I think we've actually heard that from you all pretty clearly today, that there's a lot of potential here and a lot to be gained. Okay, Nate, round us out with a
Yes.
prediction.
Great. And I just want to say how much I've enjoyed this panel and how much I've learned from Samir
We're
and
not done
Brandy.
yet because we still have Q&A. So
Okay, very good. Yeah.
So
So I would agree with Brandy that we'll be turning our kind of algorithms and technological kind of like tracking, behavior tracking inward. Certainly we can track and have opportunities to track potential clients as well. So I think that there's that's going to happen, but inward, I think behavior tracking is going to become more common and more invasive. I think that there's ways to track. I mean, we now have ways to track not only our behavior, but like where we are, our biology, and we're tracking our bodies, our moods, our tone of voice, who we're talking with. And so we can create these really fine-grained kind of models of employees and who they're interacting with and how they're adding value. Does everybody's mood increase when, Susan walks into the room? Like we can track that type of stuff, or her cat walks across the screen. And so I think because of that, decisions are going to be increasingly made by machines. I think I think that there's going to be this, two things to consider. One is I think humans need to be making these decisions alongside machines rather than just like relying on the machines. I think there's going to be this tendency to let the machines do the work and then kind of like check in every now and then. I think it's really important to have human machine decisions at all times. The other thing that I think could also happen is gamification. So it's like, in the same way, like first in, last out. Well, okay, I'll come in first and work on some personal work or whatever at work to gamify this system to get a better rating. The same is going to be taking place with algorithms. Once, employees are trying to figure out what are these algorithms measuring and evaluating, and then how do I gamify that or game the system? I think that's just going to be an ongoing back and forth challenge as well.
That's a really important question, actually, when we think about transparency and how transparent you want to be with your employees about what you're tracking. How do you think about that balance a little bit?
It's a two-sided issue because you need to be transparent, for ethical reasons, and to be above board and to be, audited or in a positive way, just to make sure that you're eliminating bias rather than creating new biases. But the more transparent you are about how the algorithm works, the more people are just going to like behave in a way, and that undermines the potency of the actual algorithm. And so I think it's a real challenge, and it's not easily solved.
Yeah. Brandy, you were nodding. Did you want to add a comment on that?
Oh, I just was double clicking on Nate's, that the transparency, I think, key for it not to feel creepy. And also, we need to understand how we're being evaluated. Like no one would say, that would ever be a fair way to conduct, evaluations of your workforce. But it is ripe for gamification. But, that's always been a piece with 360 evaluations, with surveys. This has always been something, we've contended with. But it will be a challenge moving forward, certainly.
Although I will say I have been surprised at the level of candor, even in conducting my own research and survey research, the things that people will say yes to. I'm like, no one's ever going to admit that they aren't telling their clients the truth. And people are like, yep, sometimes I don't tell them the truth. So maybe they're less squeamish than we think they are. Okay, super. We're going to move to, thank you all panel. That was fantastic. We're going to move to some Q&A. There's a question about, what are some potential markers of possible problem areas in culture? Now, Samir talked about, you could see the lack of integration kind of post-merger. But what are some other kind of key markers that you start to see show up in the data? Samir, do you want to?
Sure. Yeah. So, I think one of the things you can start to see is the degree of cultural alignment. So again, that can be measured Linguistically, there are different ways of getting at it. But if you find that you have balkanization culturally within the organization, that's problematic. And those are also more likely the environments where if you don't have some consistency in the organization, you will get the rogue behavior, you will get more of the people taking unnecessary or inappropriate risks. So I think that's one dimension I'd focus on. We can, of course, think also about the content of culture. So I spend a lot of time talking about alignment, but these tools also allow us to actually interrogate the content of the culture. Right? And so, for example, a technique one can use is called topic modeling. This is a relatively straightforward, fairly mature technique. And there are a series of papers now that have been applying this, looking at, for example, Glassdoor reviews and seeing the types of topics that people use in describing the culture of the organization. And depending on what topics are being discussed, some of those might be ones that are more problematic and others that are, again, signs of a healthier culture. So there are which we can think about as more structural models of culture, which are about, the patterns that exist between people. But then we can also think about the content of culture, and both, I think, are informative.
Okay, another question. What can we learn from other industries that have had technological disruption? Media obviously is one that comes to mind, but are there some lessons from other industries that could be useful for financial services? Who wants it? Brandy, do you want to hop in on that, or Nate? Brandy, we lost. Oh, there she is.
Yeah, I'm just considering the question. I think, we've talked about that, and you brought it up, this sort of continuous learning. I think organizations that have been disrupted or, had these exogenous shocks of some kind of technology that really changed how they serve customers or clients, like we're seeing in financial services, that those who sort of are on that sort of uncertainty absorption, right, trying to understand it, trying to learn, will be at the forefront, because we don't even know if this is the portfolio of technology that really is going to affect financial services. There might be something tomorrow, but it's sort of staying ahead of your culture, making sure you understand it. I think that's one of the reasons these tools will become so important, and being able to be responsive and adaptive, right, is, I think, the big takeaway.
Okay, another question. This is going to be a little bit of both. So to develop culture, is it better to have more in-person interaction, which enhances the relationships, but doesn't allow for as much capture of kind of digital trace data? Or would you rather be capturing more of the data to really have a better understanding of kind of what needs to change? Who wants to jump? Nate, you want to jump?
Yeah, sure, I can jump in. I think you could probably do both increasingly, right, with the tools that we have for tracking. I'm a big fan of in-person, meetings and dialogue and all that, but I totally understand the need to have our organizations be virtual increasingly, kind of have both and. But I think in-person is more potent and powerful for culture, at least at this point in time. And I think we don't lose a whole lot in trackability, honestly, with the tools and technique, for better or worse. I'm not saying that's necessarily good, but I think we can have both at the same time.
Okay, what is the most important question that a CEO or director should be asking related to technology and culture? And that could be how you are implementing culture kind of in the decentralized blockchain world, or that could be related to kind of how you're tracking and stuff. What's the most important question they should be asking? Samir, you want to?
Yeah, I would go back to this question of heterogeneity. So how consistent or aligned is the culture that's expressed in people's interactions across the range of places that people come together in the organization? To me, that would be like the number one diagnostic question. If we find there's tremendous heterogeneity and we don't have any consistency, that, in my mind, as a leader, would be problematic. And if we've identified some North Stars that really seem to show up whenever people from our organization come together, that's probably a useful thing to try to reinforce and make sure we maintain.
And are you able to track, we talked about cognitive diversity before, which is obviously incredibly important from a DEI perspective. Are you able to track the difference between cognitive diversity and cultural cohesion? Because they feel like they could just be the same. Like
Yeah, so let me say just a tiny bit more about how we measure cognitive diversity. So in that particular study, this was using, this was a data set of communications among remote software developers on an online platform. So people all over the world who come together for typically 6 to 9 months to work on a software development project where they have to collaborate with each other. And because they're remote workers, they're all communicating through Slack. And so the technique we use there is another natural language processing tool called a word embedding model, which is a shallow neural network model. And the simple version of it is it learns the meanings of words and sentences by trying to predict what the context is, the latent context is around the word. What it eventually does is it projects all the language into a high dimensional space, like 300 different dimensions, where the dimensions themselves are uninterpretable, but the distances in that space are meaningful. They tell you about the semantic similarity between ideas that are being expressed. And so if you take this approach and you look at everyone's posts on Slack on a given day, you can represent everyone's communication as a vector in this space. And then you can take everybody else who's communicated that day and represent their communications as a vector. And then you can start to do some simple vector math, like what's the distance between these two vectors? How far apart are they? And the way you can then think about team level diversity is what's the average distance between every pair of people in the space of semantic meanings? And that is a way, independent of what their personalities are, their gender, race, how they're actually communicating, to what extent are they diverse and expressing different kinds of ideas versus expressing very similar kinds of ideas. So that's an example of how you would do this at the cognitive diversity level.
Got it. Okay, thank you. That was helpful. Samir, one other question that came through because I interrupted you because I was being cute. Somebody said, what was the first of the two ways you mentioned in which people try to maintain symbolic boundary maintenance?
So the first had to do with reifying the past. So communicating in ways that harken back to the ways we used to communicate before the merger, right? And so that one you find, again, this is one of the ways we can tell where somebody came from. There's a particular style of communication from Bank One versus Bank Two, and people will, continue communicating in those ways 1-2 years after a merger, in part to signal something about their identity. Here's where I came from, and I don't want to lose that, particularly in this new environment.
Okay, thank you. Okay, we've got a question. So doesn't the fact that you need to engage in unethical behaviors, stalking employees without transparency or consent, okay, maybe not need, but considering, because you're worried about gamification, serve as a pretty clear warning sign that the system itself is fundamentally flawed and invasive? If you know employees would be upset if they knew what you were doing and you hide it from them, how do you justify to yourself the idea that this is excusable or even ethical behavior? Yeah, I think that that's a great question, right? And you're trying to think very clearly about how to be transparent without trying to, does anybody want to say another word on that or two?
Sure, I could jump in on that, and I would just agree with what Brandy said earlier, which is that we do need to be transparent. So I appreciate the question. I agree with the sentiment behind it. We do need to be transparent. One of the challenges with doing so is the gamification, and so I don't think the answer to that dilemma is to to do it without people understanding what is being tracked. So back to the CEO question, I think I would say one of the most important questions the CEO can be asking is kind of what's the other side? And so like almost every topic we've talked about today is a kind of a double-edged sword. So there's two sides to each issue. There's positives that we don't want to lose out on, but there's also negatives that we don't want to have be realized. And so we need to always look at both sides because they're all two-sided issues. And so I think that's a really important thing to be thinking about. But certainly I would agree with the idea that we do need to be transparent and then try to overcome some of the other challenges with the gamification.
I would just quickly add that I think there are two different things. One is being transparent about what data are being collected and how are those data being used. And I think that we can be clear about with everybody and ought to be clear about and make sure that we're addressing questions and concerns. But the specific algorithm that gets used, which is going to change over time, I think that need not be something that gets shared in part because it's going to keep evolving over time. But if people know whether I'm using this model or that model, I'm trying to understand these kinds of things. Here are the things I'm not going to use the data for. And being also clear about that, I think can help to build that trust with employees.
So you don't have to necessarily open source the algorithm, but telling people what you're collecting and what you're going to do with it and what you commit not to do with it is really the important pieces.
And one of the challenges with this is that I think a lot of times companies are tracking things they don't even know that they're tracking. And so when you're working with a tech company to kind of like have a certain service, it could be that you're tracking other things that you don't know. And so you have to be very assertive as a leader about understanding what technologies you're using to track and what is actually being tracked, because it could be that you retroactively realize, oh, wow, we have this gold mine of data here we didn't even know we were tracking. Let's use that, but you weren't transparent about that at the beginning.
Oh, that's a great point. That's a great point. And I also know I'm going to put in a plug for our academics who are all conducting research. I know that one of the best things for academics is to get access to companies' data. So for people who are on the line and have some data that they want some work on, reach out to our folks because I know they'd always love to get their hands on more data. So we're gonna sort of close it up, and I'll just say another kind of closing word. Nate, I wanted to just reinforce what you said, which is the CEOs should be asking, what's the other side? Because I feel like if there's a theme here, that is certainly it, right? Of that there's some tremendous opportunities, but we have challenges and we want to really be thoughtful and careful. And I think for leaders, modeling that behavior of learning is especially important when we're in kind of this new world, little Wild West transformative times. Whether it's learning about digital assets or understanding how your people feel about algorithms, right? Kind of always being in that learning mindset. And so one leader who is helping us all learn today is our host, John Williams. And so we thank him very much for organizing this panel. And I'm going to kick it back to you, John, for some closing remarks.
Well, thank you very much. It's been a terrific discussion, and thank you, Susan, for moderating it, and Brandy, Nate, and Samir for a great discussion and great Q&A from the audience participants. I thought that was terrific. It's fitting that this is our 8th cultural webinar over the last 2 years, and we turn to the topic of technology and how it relates to culture. Given that we've been doing everything online and using technology in these events, and that's been really successful. So this has been a fascinating discussion. I only have a couple minutes, and Susan captured some of the key themes that I was going to mention, but the one is that technology is moving so fast. We see that around the world we work in. We see it, in the discussion today around data and algorithms and how that can be used. But when we talk about culture and norms and values and practices, those tend to move more slowly. So this issue of a world that's changing fast, the opportunities to use data and algorithms is shifting quickly. How does that fit into really making sure you have strong ethical cultures and values, knowing that those take longer to develop and build. The second theme that I thought was fascinating was the world. Many of us working in financial services, we're watching this technology change outside in terms of fintechs and digital currencies and DeFi and all these developments. We heard the term Wild West a few times in the past hour, and of course, from a regulatory point of view, you're really trying to get that balance and get to the trade-offs that Nate mentioned, and around making sure there's innovation, but at the same time that innovation is done in a stable and safe way. And I think that theme came up a lot about how technology and innovation is being used within organizations and trying to get that same balance. And as many people noted, really leaders being very cognizant and aware of the trade-offs and the pros and cons. And I guess the last thing that I took some positive feedback, or kind of a message from was Samir's comment about that, data can help us, analytics can help us, manage and lead our organizations and make sure that we have a strong culture. But walking around and listening, and actually listening to the people that you work with is an important part of that. And I know that my own experience of having listening sessions is a great way just to understand where people are at, what's important, what's going well, what isn't, and what we can do about it. So I thought that was, combining maybe the old-fashioned with the new was very interesting. And then I think the other theme that came out, and I'll just mention to finish, is this idea of transparency, and how does transparency versus gaming the system versus creepy oversight from technology, how do you manage those trade-offs? So again, this has been a terrific webinar. Thank you everybody for participating, and for all those who have been listening, please be on the lookout for announcements of future events. And with that, I think I'll say everybody have a great day. Stay safe.